My name's Jovan. I'm the finance manager here at Kelowna Chrysler. What I do here at the dealership is I get clients approved on vehicles that they purchase. So basically what happens is our salesperson will go through our inventory with you. You've now selected a vehicle and you've agreed to purchase the car. The next step is for you to come into my finance office. What I do is get some information so that I can get the vehicle approved for you through the banks.
Hi, I'm Jarrod Stocks. I'm one of the finance managers here at Kelowna Chrysler. I've been here for 5 years now and working with everybody from great credit all the way down to challenge credit. Challenge credit can be anywhere from like bankruptcies, written off car loans, written off Visas, MasterCards. What we usually do is we kind of do a snapshot of their credit and we get a game plan going. If you have great credit, usually it's quite easy to get approved. We always just want to make sure that debt servicing, so what you bring into your bank versus what's going out, matches up, and that you can actually afford the vehicle. And then, yeah, we can pretty much go shopping from there, whether it's a small compact car, SUV, or truck, or something that you need for work.
Some of the reasons why you want to get through a dealership is we deal with a variety of different lenders, so we can get a variety of different interest rates. It's in our best interest to get you the best terms and conditions, and it's also in your best interest. Now, there is other ways that you can purchase the vehicle. You can purchase it with a line of credit, or you can use home equity line of credit. The only disadvantages to those is they actually calculate interest differently than a traditional bank. So when we put you on a fixed rate finance, they're calculating interest over an annual basis, where typically on a line of credit or a home equity line of credit, they calculate it on a daily or a monthly basis, which in turn means you pay more interest on those, where a standard fixed rate annual loan, you wouldn't. The reason why you want to finance a car is typically we can get lower interest rates than standard investments that you have. So just to give you an example right now, there's a lot of investments that are doing anywhere from 8 to 10% return per year on your investment. So if you're purchasing a $50,000 vehicle, for example, if you're paying cash, you're putting your cash towards a depreciating asset, where there's a lot of avenues that you can go with your own personal bank in terms of investment banking. Typically on a $50,000 vehicle, if it's brand new, I can get you 0%, or if you wanted to go with a standard rate, 3.99%. Which in turn, it would make more sense for you to make money off of your money rather than spend your money on a depreciating asset. Financing a vehicle is the fastest way to rebuild credit. So anybody that's looking to rebuild credit, it is a lot quicker than if you were to take out a line of credit or if you were to use a credit card. The reason being is because you're actually making scheduled monthly payments on your credit bureau, which the banks, when they look at a person's approval, they take a look at payment history. On a credit card, typically they look at your minimum payment, which can be anywhere from like $10 to $100, where on a vehicle finance loan, you're anywhere from $300 to $800. So the $300 to $800 payment history that you're making on the vehicle will actually build your credit a lot quicker than credit card at $10 to $100. So some things that actually affect your monthly payment is cash down, the term of financing, and the interest rate. So cash down and term are the two biggest things that do affect your payment. So the longer the term you go, the smaller your payment is. The more cash down you put on your vehicle, the smaller the payment will go. Some people like to go zero down, and some people like to put 50% of the vehicle purchase price down. So cash and term do affect your payment. Sometimes the banks will ask for a cosigner. So basically the way that cosigners work is we normally want it to be a family member. So a mom, dad, aunt, uncle, spouse, grandmother, grandfather, sometimes a close friend, common law. Basically the way that a cosigner works is they would go on the application with you to help strengthen the application to be able to get the financing approved. Yeah, so that's how a cosigner works. Are you in the market for a new or pre-owned vehicle? Come on down to Kelowna Chrysler. We deal with all kinds of credit, good credit, bad credit, excellent credit. So if you're in the market for a new or pre-owned vehicle, come on down and see us.